Hey there, welcome once again to Beating the Market. I'm Scott Welsh, and has it been 4 weeks already? Feels like we were just talking to each other, and now it's time for us to talk once again. We get together at the beginning of each month to go over trading strategies. And today we're going to have a little thought experiment. We're going to talk about what it is we're doing here and why we're here, why millions all over the world flock to this channel to find some trading information. We are going to talk about some numbers in a little bit. I promised a free system, and I will deliver. But these are hypothetical numbers meant to inform and entertain you. Do not risk money you cannot afford to lose. Past performance does not indicate future results. Okay. Put your thinking cap on. Anyone have a thinking cap? I lost mine. Anyway, here's a big question. As I'm doing these videos, and I've been doing these videos actually quite a long time, why do it? Why give away stuff for free on a silly YouTube channel tucked in the corner of the trading universe? Why would I do it, right? And in other words, what's the catch? Get it? That's the most famous catch in Major League Baseball history. It's Willie Mays, the catch. Get it? But what's the catch? Why am I getting together with you once a month or potentially even more often? What's the point? What's in it for me, I guess you could say? Well, as you may or may not know, there is a secret to making internet YouTube riches, and here are some of the highlights. Number one, if you're a trader, that is. Now, all sorts of side hustles, and I throw up in my mouth a little bit every time I hear or say that word, so try not to say it. But in the trading genre, here's how you could do it, right? I've done a lot of research. If I give you a bunch of fake back tests, probably maybe only a year or two old, right? I can't go too far back because then it's hard to show you amazing results. But if I give you a bunch of fake back tests for free, like here, try this cookie, try this brownie, try a sample. I'm going to hook you. I'm going to hook you on my cookies. I do make good cookies, but that's another video. I would give you fake back tests for free, and they would look great, right? And so now I'm immediately preying on anyone who's not doing great. Maybe you're struggling, maybe you just took a loss, maybe who knows, lost your job. But now you accidentally come across a YouTube channel, right? And that YouTube channel promises riches, okay? So I would give you that back test. Hey, if you join me, if you join my trading club, this is what you could make: $10,000 every month, and starting with only $100 in your account, or something like that. You know what else I do? I would make very nicely super cool videos produced to the hilt. Hire someone. Got to spend money to make money, right? Got to spend to make. And I would have me doing all sorts of cool things. I mean, I live near the beach. Brag, brag. Maybe I could go to the beach. Show you a video. Hey guys, it's me. We're from the beach, and this is what you could do if you trade like me. Something like that, right? Have you seen those? I might have seen a couple. So if I show you a video with my fake back tests, I got your interest now. Now, once I've gotten your interest and given you a little bit of that free sample, what would I do then? I'd give you one of these. It's not 10,000. It's not 5,000. It's not 4,000. It's blank, right? I'd give you a little bit of, oh, I'm getting a deal. Whether it's real or not, I would try to do that to you, right? That's how you do. It's a race to the bottom, as Seth Godin would say, and the race to the bottom works sometimes, doesn't it? So I would use that race to the bottom. Cheaper, 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 better, 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 right? It's working. This is working. I'm ready to buy myself. And then I try to force you, Dwight Schrute style. Now, 1, 2, 3, now. Buy it now. 1, 2, 3, 4, 5. Buy it now. How do you feel? Did you buy anything yet? Pretty good. And then I just repeat. All right, I'd find something new to back test. I'd find something new in the news, and I would just keep going back and forth. Now, that would be a very justifiable reason for me to give free stuff away on this YouTube channel, right? Because I'm making money. I'm hustling, baby. I'm hustling, right? But then what? What do I get out of that? I get the satisfaction of fooling you. I get the satisfaction that I spent money and I made money. Like, where does that go? Like, what change did it make? How did I get better? How did you get better? What's the point of doing it that way? Now, here comes the thoughtful part. What if I didn't want to hustle? I didn't want to trick you into buying stuff. But what if I had a different motive? What if I wanted to change a regular person's financial life forever? Okay. I read a lot. Okay. Another brag. I'm so braggy today. I read a lot of books. And what interests me now is financial independence, retire early, financial gurus, self help, how to be a millionaire, how to 10x my thinking, right? I left some keywords in there. You probably have heard some of those books, but I read them all. I love them. But what I would love, well, hypothetically, of course, what I hypothetically would love is a regular person being able to put money aside and have that money make money. Instead of plopping in an index fund, what if I wanted people to plop it in something else that worked better? What if I remember how hard it is and how confused I was, and I don't want that for someone else? Sounds kind of noble, actually, now that I say it out loud. But what if I wanted to do that, right? What if I love doing trading research? Makes me boring, I know. And what if this research started to show over and over and over again for months and months and years that, man, this research looks way better than an index fund. It looks way better than maybe even real estate, buying a house, selling a house. Now, I don't want to get into real estate. There are ways to do it well, and sometimes index funds work, right? Especially the last few years. But what if my research said something different? And what would I do, right? What would that look like if I didn't want people to suffer with the conventional methods, or I wanted them to do better than the conventional methods? What would I do then? Well, I'd give away real back tests, right? I would want to give that out there. I definitely wouldn't want to charge for everything. Maybe charge for something that I've worked a long time on. I get that, right? I'm not immune to needing money to have to live, right? But if I really wanted to make change, you can't charge people $5,000 for your good information. I would need to give some stuff away for free, and I would happily want to do that. I would want to build trust, right? This is our money we're talking about. I don't want to be untrustworthy. So I would have to try to make those back tests as real as possible. One slip up on a back test could be really, really bad for me and for anyone else. So I'd have to put stuff out that I would work hard on, right? And that would have to ask for help. It can't just be me bombarding the YouTube channel with do this, do this, do this. It would have to be some sort of a community. Some sort of community would have to build. People that would give thoughtful and generous and sympathetic and understanding feedback. People who cared. People who wanted to do better and wanted their friends to do better or wanted other people to do better. It probably isn't going to be just me in some, nondescript YouTube channel hiding in the corner. I would probably need help. And then I would need help with feedback. I would need help, then give help back to the help that I just got, right? Let's say I gave something out for free and someone traded it. Let's say it's Forex, and let's say they traded it with, just a penny per tick, like a micro lot, and it did great. Well, I would need to know that, right? Wouldn't I? And I would need to know, oh, it is working. I mean, my testing shows it's working, but nothing is better than doing it in the free market, right? If I come up with all these ideas, can I trade 100 different accounts? No, but it would be helpful, and we could exponentially get better data to find out what's true and what's not true and what needs to be tweaked if I had help, if I had feedback, okay? This already exists, obviously, right? This sort of methodology. It online threads where people get together. They've done it for meme stocks. Buy this, don't buy that. There's also some sad stories in there, but I mean, this exists out there. People trying to get together, Facebook groups and so forth. My curiosity is that can this sort of thing be done in the long term? Not for get rich quick on GME, but for the next 20 years, invest this way, right? It would definitely do better than any index fund. It would be better than buying a house and trying to sell it, especially if the market goes down again, which probably it will. Can this sort of cooperative place happen in long-term, life-changing saving and trading, not by saving and index funding. Okay? Now, that all being said, why do we come here? Well, if I'm going to do what I just said I did in the previous slides, I'm going to give you some free information, right? Again, why wouldn't I charge for this? Because I want to build something that helps more than just me making a sale. At least that's what I'm trying to do, and that's what we're going to do. Okay, so here's a free trading system. Now, this uses a stop and reverse methodology. Why stop and reverse? Well, if you do your research, you'll find out that the most robust method of trading is stop and reverse. It's not, oh, I'm going to optimize this target, I'm going to optimize this stop, and I'm going to optimize this break even, and I'm going to do this, right? The more you optimize, the more danger. It's why everybody's so skeptical. It's why everybody's so afraid. But stop and reverse doesn't do that. It's impervious to curve fitting because the entry is the exit. I'm not the only person out there. This is not unique. Stop and reverse trading works best over the most things. Do 60 different futures instruments. Guess what one will be the best? It's not perfect, but it's the best, the most consistently profitable over the longest possible term. That's what I'm talking about. The most profit over the long term, not 1,000,000%, because what happens with 1,000,000%, they also can crash, right? GME didn't stay at 400, did it? For example, right? Those things can be dangerous. We're talking about long-term consistency. Stop and reverse, at least according to the math, seems to be the best. Okay? So let's talk about a stop and reverse system, shall we? Now, this is a Forex, and I know that Forex is off the beaten path, but it's not that far. And you know what? Maybe off the beaten path is where we should be looking, right? Just throwing that out there. So this is the pound yen 1 hour chart. This is going to use John Bollinger's trademark Bollinger Band. Length of 100, a ridiculous length, but it's very long-term in nature. And if we're going to have something robust, we need something long-term. Here's the deviation. Oh, wait, there's some optimizing there. I know. You could use 3, you could use 2, you could use anything in between. I did 2.6. It's the only optimizing I did on this particular system. And it works with things other than 2.6. But let's just bear with me for a second. 2.6, okay? The target is 1,500 pips. You know what that means? It means we don't really have a target. That's why it's stop and reverse. It almost never will hit 1,500 pips before the system reverses. And if it does, I mean, that's okay, right? I think anyone would take a 1,500 pip profit target. Holy Marconi. There is a stop loss, though. Yikes. I know. But you could take it out. If you want it to be truly robust and truly stop and reverse, take it out. You can see there's not much here. Honestly, I took these from other systems. I didn't optimize this at all. Only thing I optimized was this 2.6. And my original idea was 3. And I just said, well, what if it's a little bit less? What if I get a few more trades? Okay? That's it. It just goes and goes and follows the market and goes back and forth riding the wave. Here are some recent trades. You can see this is the end of a short trade. When price popped above the Bollinger Band, it turned into a long trade. When price popped below the band, it turned into a short trade, and so forth. It waits for those characteristics to pop up in the opposite direction. And when they do, it immediately exits and enters again. It's always in the market, nearly always. 99.999% of the time it's in the market. I don't honestly know when it would get out of the market. I guess when it hit the profit target. Yes, that's what I meant to say. Got it? Now, how does a system like that do? On the left here, look at that. No header. This is some great production on these videos. This is the market in the form of the S&P. Okay? Look at this. 2004 to 2022. So we're almost looking at 20 years of returns. 2008, you know how bad it was. Went down 50% and it ended the year over 50% and it ended the year at minus 36. Came right back in 2009. Here comes the bull market into 2018. And then 2019, everything's great. 2020 was supposed to be a catastrophe, but the Fed didn't let it happen. 2021, it's a bull market, baby. Keep rolling. And it's crashing right now, at least a little bit, right? A little bit of a correction right now. If you just add all that up, Again, there are other ways to measure. I'm just trying to make it very simple, apples to apples. If you add all this up, it's 207%. Okay? Just taking that and adding it up. I did Excel, or I had Excel do it for me. This is the trading system we just talked about on a hypothetical $40,000 account. You could use any size account that you wanted to, and it used one full lot each time. You could use a micro lot. You could use a mini lot. You could use 100 lots. Doesn't matter. It's that system, Bollinger Band, stop and reverse. Here's the profit. No compounding. I just took all the profit from each year. We had some losing years. Yikes, losing years. What system ever loses? Well, if I'm going to sell you something, I would show you something that never loses, right? But this loses. Actually, well, never mind. It does lose. I could have optimized it out, but I didn't. This would only be on a hypothetical $40,000 account. This would only be 4.7%, right? Ooh, nice year in 2005. Oh, loser. Good in 7. That's a little bit better than the market, right? Over 137% as opposed to down 36, right? Now, it didn't bounce back in 2009, so the market's laughing. And you can just see it's self-explanatory. Then we got a little loser here. Wasn't great over here for the market either. Monster year in 2016. Of course, there was some stuff going on with the U.S. election and Brexit and all that stuff, but trend following does very, very well in chaos. I show you 2008 as proof. So it did well in 2016, and then it did fairly well, right? It's been hanging in there. Did great in 2021. And, ooh, wow, it's doing great in 2022 and the historic volatility of 2022. Now, all I did was I didn't compound. All I did was add all this up. 404% versus 207. But what about the drawdown? Well, we're looking at 50% drawdown here. We're looking at about 30% drawdown here, max. So double the money for almost half the drawdown. Okay, that's what this YouTube channel is all about. This is what I'm interested in sharing with you, okay? Systems like this that might change where we put our money and might change how well our money can do, okay? The bottom line is there's no catch to this YouTube channel. I would like to make change, all right? I would like to use my voice and my research to possibly help someone, okay? That's why I'm here. I want a place where regular people like you and me, we can go and we can do better than just plopping it into some sort of retirement income or index fund, okay? And I'd love to have feedback. I'd love to have you say, I tested this idea and X happened, or I traded this in a very small account with a very small trade size and X happened. I'll take anything that's constructive, thoughtful, generous, kind, interesting, intelligent, anything along those lines, right? The more we have of that, the better chance we have of actually doing something that might help people, okay? That's our video for this month. I did have a book. Oh, look, I am selling. I did have a recent book that I came out last year, and if you want to get on the free newsletter, that's all you have to do. We do stuff like this in newsletter form, and that comes out 4 times a week, all right? All for free. All right, until we talk again next month, or even sooner, who knows when you might hear from me again, but it will definitely be at the beginning of next month, if it's not before. Bye for now, everybody. Have a great month.